Hey guys, welcome back to another session of using technical analysis to look for some money making opportunities. So now we're looking at Kiwi dollar. We've been looking at Kiwi dollar for a while, and while you look at this chart, it's a little bit tough to think, where am I gonna buy? What is the support? It's just it looks like it's ranging. Can't really see what's happening. So the key to all this is really to combine your support and resistance lines with Fibonacci. All right. So what I like immediately to draw is this line here. I'm not sure if you can see it, but there's this really nice support level here. Really nice support level here. Why is it a nice support level? Well, a support level is where the bulls and bears meet a lot. So bounce off once here, bounce off once, a little bit of reaction there, bounce off once, react off once, bounce off once, bounce off once. So this is kind of like a key area of support. It's an important level where decisions are made. All right, so this will be I'm just going to highlight this, or rather somewhere here. Yeah, I'm going to highlight this as our first key level of support. Let me see where lines up the best. All right, somewhere here. Okay, yeah, somewhere here lines up the best, where it catches the lows as nicely as possible. What I mean by catching the lows basically means that we don't this thing here, this thing here, this thing here, this thing here. It just about lines up very nicely when we adjust the line to here. Yeah. Okay, so now we see, does this particular support line coincide with a Fibonacci level? So we do a Fibonacci retracement from the top, and there we go. It's not by chance actually. It's usually the way the market moves, the market structure. 38% support, Fibonacci retracement, very nice support level. So we can actually expect the bounce up from there. Yeah, and then of course when we do a Fibonacci extension from here, you can see it's just the same movement down. What you can see is the 1.0 projection. Oh shit, I mean the 1.0 projection here, which basically means that the movement from here to here is the same as the movement from here to here. All is cool. Yeah. So this is another good Fibonacci extension level, 0.618. I'm not sure you can see it. 1.0, 1.618, 2, and 2.618. The rest of it is crap. So, don't need to look at the rest of the Fibonacci extension levels yet. Okay. So we find three levels here: a Fibonacci retracement, a Fibonacci extension, and a horizontal support. So this gives us, it gives us good. Belief, good conviction that we're going to see a bounce up from here. Okay, and where is the key level of resistance? Is actually, if you look at it carefully, it's right here. This will be our take profit. All right, it's a little bit far away, I agree, but this, if you look at it closely, I'm just going to zoom it in here. You can see it's a swing high, definitely a nice swing high here, and then there's a nice swing low here. So it's overlap support. We're going to play a very bold move all the way up. So it's a pretty good risk to reward trade. We're going to play a move all the way up here. Then where is our stop loss going to be? If we're going to take a Fibonacci retracement from the bottom of here to here, I say our stop loss, a safer place to have our stop loss would be either the 50% or the 62%. In this case, I like the 50% support here because there's a lot of movement around there. 62% is fine too, but if we're really going for a Hollywood trade, what I mean by Hollywood trade is that we're risking very little for a very big profit. We're gonna try something like this. We're gonna try to risk so little for something so little for something so much. There's a risk reward of like 1:5 or something. It's good stuff. If it gets it correct. If you want to be a little bit more conservative, you can have your stop loss over here. In this example, we have our stop loss here because I I personally think that well, I don't think that, I hope that, you know, price shoots up from this buy entry. If not, we get stopped out for a very small loss. If if it's correct, then we get a really juicy, delicious bunch of pips. Yeah. Then of course we look at my favorite indicator, stochastic and RSI, stochastic or RSI, and well, we can't see much actually. It's just showing that there's nice support level here. There's a nice support level, and price is above the support level. Nothing too fantastic. I believe if we adjust it to 21, let me play around the settings a bit and see how different it looks. All right. Oh man, this stochastic doesn't move. I'm serious. It's supposed to move. All right. Okay. It's nothing much. We're still above support, so at least we can expect a bounce up from there. Yeah, stochastic is not telling us anything much, but we can still look at RSI, and I'll see if RSI is telling us anything more. Well, no, not really. So we're just gonna rely on stochastic for now, and to see that, you know, it's a bounce up. We can find multiple levels on this buy entry, so you know, it's quite nice. It's really quite nice. Our buy entry, if you can see, is the 0.6994. Our take profit is 0.7090, and our stop loss is 0.6978. All right, I hope you guys have been having a good trading week, and you know, stay safe, trade safely, don't revenge trade. And if you have any questions, feel free to ask me in the comments or wherever it may be. Yeah. Cheers and peace out, guys.